Hello dear student, I am Nurhan Osama, teaching assistant in Faculty of Commerce English section. Now we will start the first chapter in the cost accounting course, which is the chapter number 4 named by the job costing. Let's start by knowing the learning objectives of this chapter. Number 1, describe the building block concepts of costing systems. Number 2, distinguish between the job costing and the process costing. Number 3, 7-step approach to job costing. Number 4, distinguish between the actual costing from the normal costing. Number 5, account for end of period under allocated or over allocated indirect costs using alternative methods. The first learning objective, which is building block concepts of costing systems. Here is first the cost object. A cost object is anything for which a measurement of costs is desired. Second, the direct costs of a cost object are the costs that related to a particular cost object that can be traced easily to that cost object in an economically feasible and cost-effective way. But the indirect costs of a cost object are the costs related to a particular cost object that can't be traced easily to that cost object in an economically feasible, cost-effective way. So the indirect costs are allocated instead of tracing. So the indirect cost allocated to the cost object using cost allocation method. So cost tracing is the process of assigning direct costs, and the cost allocation is the process of assigning indirect costs. Number 4, the cost pool. What is the cost pool? A cost pool is a grouping of individual indirect cost items. Cost pools can range from broad, such as all manufacturing plant costs, to narrow, such as the costs of operating metal cutting machines. So cost pools are often organized in conjunction with cost allocation bases. Number 5, the cost allocation base. The cost allocation base is a factor that links in a systematic way an indirect cost or a group of indirect costs to cost object. So the cost allocation base is the link between the cost object and the indirect costs. Second point is distinguish between the job costing and the process costing. First one, the job costing system. In a job costing system, the cost object is a unit or multiple units of a distinct product or service called a job. Each job generally uses different amount of resource. The product or service is often single unit. So the job costing system related to different products or services. But the process costing system, in a process costing system, the cost object is masses of identical or similar units of a product or service. So here is the difference. In the job costing system, there is a different products or services called a job, but in the process costing system, the product or the services are similar or identical. And that graph represents the difference between job costing system and the process costing system. As we said, the job costing system, distinct units of a product or service, different units of product or service, but the process costing system, masses of identical or similar units of a product or service. Third point in this chapter is the 7-step approach to job costing. First step is to identify the job that is the chosen cost object. Step number 2, identify the direct costs of the job. Step number 3, select the cost allocation basis to use for allocating indirect costs to the job. Step number 4, identify the indirect costs associated with each cost allocation base. Step number 5, compute the rate per unit of each cost allocation base used to allocate indirect costs to the job. How we computing the rate per unit? By this equation. The budgeted manufacturing overhead rate equal the budgeted manufacturing overhead costs divided by the budgeted total quantity of cost allocation base. So the budgeted overhead rate equal budgeted overhead costs divided by the budgeted base. Step number 6, compute the indirect costs allocated to the job. Step number 7, compute the total cost of the job by adding all direct and indirect costs assigned to the job. Distinguish between the actual costing from the normal costing. What is the difference between actual costing and normal costing? Actual costing is a system that uses actual costs to determine the cost of individual jobs. It allocates indirect costs based on the actual indirect cost rates times the actual quantity of the cost allocation base. So, actual costing based on actual rates times actual base. But normal costing method that allocates indirect costs based on the budgeted indirect cost rate times the actual quantity of the cost allocation base. So the difference is the rate. In the normal costing, it uses the budgeted indirect cost rate, but in the actual costing, it uses the actual rate. Let's start solving the first exercise, number 417. The problem says that actual costing, normal costing, accounting for manufacturing overhead, distinct products uses a job costing system with two direct cost categories, direct material and direct labor, and one manufacturing overhead cost pool. He said that Destin allocates manufacturing overhead costs using direct manufacturing labor costs. Here is the base. He used the direct manufacturing labor costs as a base. And Destin provide the following information. He gave me budget for 2014 and the actual results for 2014 for the direct material costs, 2 million in the budget, and the actual one is 1,900,000. Direct manufacturing labor costs, 1,500,000 budget for 2014, and the actual results was 1,450,000. And the manufacturing overhead costs, 2,700,000 in the budget, and the actual results was 2,755,000. First required, he want to compute the actual and budgeted manufacturing overhead rates for 2014. So as we said before that, we calculated the rate by dividing the overhead costs by the rate, by the base, sorry. So for the actual overhead rates, we will divide the actual manufacturing overhead costs divided by the actual manufacturing labor costs. And for the budgeted overhead rate, we divided the budgeted overhead cost divided by the budgeted direct labor cost, which is the base. So here is the answer. Budgeted manufacturing overhead rate. So here is the budget rate. We will dividing the budgeted overhead cost by the budgeted base, which is the direct manufacturing labor cost. $2,700,000 divided by $1,500,000, the labor cost, will give us the rate, budgeted rate, which is 1.8. The actual manufacturing overhead rate equal actual manufacturing overhead costs divided by the actual base, which is the direct manufacturing labor cost, 2,755,000 divided by 1,450,000 equal 1.9 or 190%. The second required, during March, the job cost record for job 626 contained the following information. So this information is for special job in March. He gave me the direct material used 40,000 and direct labor cost 30,000, and he want to compute cost of the job using both actual costing and normal costing. So to calculating the cost of any job, we must add the direct material used and the direct manufacturing labor costs, adding to them the allocated overhead cost or the factory overhead. So the answer will be as follows. The costs of the job 626 under actual and normal costing follow. Actual costing and normal costing, the direct material and the direct labor for both are the same, no change in number. So the direct material 40,000 in actual costing and normal costing. Also the direct manufacturing labor costs is 30 in both, 30,000 in actual costing and also in the normal costing. But the difference in the overhead costs, as the actual cost based on the actual rate, but in the normal costing it based on the budgeted rate. So here in the actual costing he multiplied the actual base, which is 30,000 labor costs, multiplied by the actual rate, which is 1.9, to give us 57,000. And in the normal costing, he multiplied the actual base, which is 30,000, multiplied by the budgeted rate, which is 1.8, to give us 54,000. By adding direct material, direct labor, and manufacturing overhead costs, it gives us the total manufacturing costs of job 626 under the actual costing, 127,000, and also in the normal costing adding the direct material and direct labor and the overhead allocated overhead cost to give us 124,000 as total manufacturing cost for the job under normal costing. Third requirement, at the end of 2014, compute the under or over allocated manufacturing overhead under normal costing. He wants to know if there is under or over allocated overhead, under which method, under the normal costing. So to know the total overhead allocated under normal costing, we multiplied the budgeted rate multiplied by the actual base, which is the actual manufacturing labor cost. So the actual base here, which is the direct manufacturing labor cost, 1,450,000, we will multiply this number multiplied by the budgeted base, which is 1.8, to get the total manufacturing overhead allocated under normal costing, which is 2,610,000. So to know if there is the under allocation or over allocation, we have to compare this number, the manufacturing overhead allocated, compare it with the actual manufacturing overhead costs. So the actual overhead cost here is 2,755,000. We will subtract from it the allocated overhead, which is 2,610,000. We will get 145,000, which means there is under allocation in the manufacturing overhead. He asked also, why is there no under or over allocation under actual costing? There is no under or over allocated overhead under actual costing because overhead is allocated under actual costing by multiplying the actual labor cost, which is the actual base, multiply the actual rate, which is the actual manufacturing overhead rate. This, of course, equals the actual manufacturing overhead costs. All actual overhead costs are allocated to products, hence there is no under or over allocation for the overhead. Number 4, he asked, why might managers at the same product prefer to use normal costing than the actual costing? Here is the answer. Managers at distinct products might prefer to use normal costing because it enables them to use the budgeted manufacturing overhead rate determined at the beginning of the year to estimate the cost of a job as soon as the job is completed. Managers want to know job costs for ongoing uses, including pricing jobs, monitoring and managing costs, evaluating the success of the job, learning about what did and didn't work, bidding on new jobs, and preparing interim financial statements. Under actual costing, managers would only determine the cost of a job at the end of the year when they know actual manufacturing overhead costs. The second exercise, 419, budgeted manufacturing overhead rate, allocated manufacturing overhead. Camaro Company uses normal costing. It allocates manufacturing overhead costs using a budgeted rate per machine hour. So the base in this problem is the machine hours. The following data are available for 2014. He gave me the budgeted manufacturing overhead costs by $4,200,000 and the budgeted machine hours 175,000 hours. Actual manufacturing overhead costs 4,050,000 and the actual machine hours 170,000 hours. Require number 1, calculate the budgeted manufacturing overhead rate. As we know that the overhead rate budgeted equal to budgeted cost, overhead cost, divided by the budgeted base, which is the machine hour in the problem. So, the answer of the first question, budgeted manufacturing overhead rate equal budgeted manufacturing overhead cost divided by the budgeted machine hours. $4,200,000 divided by 175,000 machine hours will give us $24 per machine hour. It is the rate. Required number 2, calculate the manufacturing overhead allocated during 2014. We use the budgeted rate here from first question and multiplied it by the actual machine hours, which is the actual base, to get the overhead allocated. So overhead allocated multiply 170,000, which is actual base machine hours, multiplied by the budgeted rate, get from the first one, multiply 24, we will get the overhead allocated 4,080,000. Number 3, calculate the amount of under or over allocated manufacturing overhead. And why do managers need to calculate this amount? The amount of under or over allocated manufacturing overhead by subtracting from the actual overhead cost the allocated overhead cost. Here is manufacturing overhead allocated 4,080,000 and the actual overhead cost 4,050,000. We will get that the overhead allocated more than the actual, so there is an over allocation. Over allocated manufacturing overhead is 30,000. Why managers need to calculate this amount? Because manufacturing overhead allocated is greater than the actual manufacturing overhead costs. So we will get the difference and know if there is an over allocation or under allocation. Third example, 420. Job costing accounting for manufacturing overhead budget rates. The Link Company uses a normal job costing system at its Minneapolis plant. The plant has a machining department and an assembly department, so there is two cost pool. Its job costing system has two direct cost categories, which is the direct material and the direct manufacturing labor, and two manufacturing overhead cost pools, machining department overhead allocated to job based on actual machine hours, and the second one, the assembly department overhead allocated to jobs based on actual direct manufacturing labor costs. So, two departments with two different pays. Machining department, the base is the machining hours, and assembly department, the base is the direct labor cost. The 2014 budget for the plant is as follows. Manufacturing overhead 1,800,000 for the machining department and 3,600,000 for the assembly department. Direct manufacturing labor costs 1,400,000 for the machining department and 2 million for the assembly department. Direct manufacturing labor hours 100,000 hours for the machining department and 200,000 hours for the assembly department. Machine hours 50,000 for the machining department and 200,000 for the assembly department. First, he wants to compute the budgeted manufacturing overhead rate for each department. As we know that the rate or the budgeted rate equal to budgeted overhead cost divided by the budgeted base for each department. We will divide the budgeted overhead in the machining department, for example, the budgeted overhead, which is 1,800,000 divided by the base, which is the machining hour 50,000. And also in the assembly department, the overhead 3,600,000, we will divide it by the base, which is the direct manufacturing labor cost 2 million. So the solution, budgeted manufacturing overhead divided by allocation basis for the machining department 1,800,000 overhead cost divided by the 50,000 hours budgeted base equal $36 per machine hour. For the assembly department, 3,600,000, which is the budgeted overhead cost divided by the 2 million, which is the direct labor cost, equal 180% of direct manufacturing labor cost. The second required, during February, the job cost record for job 494 contained the following. Direct material used 45,000 in the machining department and 70,000 in the assembly department. Direct manufacturing labor cost 14,000 in the machining department and 15,000 in the assembly department. Direct manufacturing labor hours 1,000 for the machining department and 1,500 in the assembly department, and machining hours 2,000 and 1,000. He wants to compute the total manufacturing overhead costs allocated to job 494. Okay. For the machining department, actual manufacturing overhead 2,100,000. We will multiply to get the manufacturing or the allocated overhead the base multiply actual base multiply the budgeted rate. Okay, for the machining department, the actual base is machine hours, which is 55,000. We will multiply it by the budgeted rate. We will get here 36 per machine hour to get the allocated overhead for the machining department, 1,980,000. So 2,100,000 actual overhead and allocated 1,980,000, so the difference is 120,000 under allocation. Then for the assembly department, the actual overhead cost is 3,700,000 and the allocated overhead is multiplying the actual base, which is the direct labor cost, 2,200,000 multiplied by the budgeted rate, which is 180%, to get the allocated overhead 3,960,000. By subtracting or getting the difference between both, we will get that the allocated overhead is more than the actual, so there is an over allocation by 260,000. Problem for 31. Job costing accounting for manufacturing overhead budgeted rates. The Pisano company uses a job costing system at its Dover, Delaware plant. The plant has a machining department and a finishing department. Pisano uses normal costing with two direct cost categories, direct material and direct manufacturing labor, and two manufacturing overhead cost pools, machining department with machine hours as the allocation base and the finishing department with direct manufacturing labor costs as the allocation base. The budget for 2014 for the plant is as follows. Manufacturing overhead cost 9,065,000 for the machining department and 8,181,000 for the finishing department. Direct manufacturing labor costs $970,000 for the machining department and $4,050,000 for the finishing department. Direct manufacturing labor hours 36,000 for the machining department and 155,000 for the finishing department. And finally, the machining hours 185,000 hours for the machining department and 37,000 hours for the finishing department. He want to know what is the budgeted manufacturing overhead rate in the machining department and in the finishing department. So we will calculate the rate for both departments using the budgeted overhead costs divided by the budgeted base. So for the machining department, we will divide the budgeted overhead cost 9,065,000 divided by the machine hours, which is the budgeted base 185,000, to get the budgeted rate $49 per machine hour. And for the finishing department, we divide the budgeted overhead cost, which is 8,181,000, divided by the budgeted base, which is $4,050,000, equal to 102% of direct manufacturing labor costs. Okay. Number 3, during the month of Jan, the job cost record for job 431 shows the following. Direct material used for both department, direct manufacturing labor costs for machining department and finishing department, and direct manufacturing labor hours 2070, machine hours 140 and 20. He wants us to compute the total manufacturing overhead cost allocated to job 431. Total manufacturing overhead cost allocated for each department and then adding the both department to get the total overhead cost. For first the machining department, we multiply the budgeted rate, multiply by the actual base, actual machine hours, and multiply the budgeted base by the labor costs actual labor cost to get the overhead for the finishing department, and by adding the overhead for each department, we will get the total overhead costs for the job. Here is the answer. Machining department overhead $49 multiplied by 140 machine hours to get $6,160, and finishing department overhead 202% multiplied by 1,250, we will get 2,525. Adding both numbers to get total manufacturing overhead allocated $9,385. Number 4, assuming the job 431 consisted of 300 units of product, what is the cost per unit? So, the total cost of job 431. Direct costs, direct materials for machining department is 13,000 and finishing department 5,000. Direct manufacturing labor for machining department 900 and finishing department 1,250. So the total of the direct costs are $20,150. And for the indirect cost for the machining department, overhead 49 multiply 140, 6,860, and finishing department overhead 202% multiply 120,250, we will get 2,525, which is the total overhead for both department 9,385. By adding the direct cost with the indirect cost, we will get the total cost of the job $29,535, and dividing this total cost by the number of units, we will get the cost per unit. So the per unit product costs of job 431 is 29,535 divided by 300 units, we will get 98.45 per unit. Then, fifth question, amounts at the end of 2014 are as follows. Manufacturing overhead incurred 10 million in machining department and 7,982,000 in finishing department. Direct manufacturing labor costs 1,030,000 in machining department and 4,100,000 in finishing department, and the machine hours in machining department 200,000 hours and in the finishing department 34,000 hours. He wants to compute the under or over allocated overhead for each department and for the Dover plant as a whole. Okay, here for the machining department, the actual overhead was 10 million and the manufacturing allocated overhead was 200,000 hours multiplied by the budgeted rate, which is 49. We will get the allocated overhead for the machining department 9,800,000. So the actual overhead is more than the allocated overhead, so there is an under allocation in the machining department by $200,000. But in the finishing department, the actual overhead cost was 7,982,000, and the allocated overhead, we multiply the actual base multiplied by the budget rate. Actual base was 4,100,000 multiplied by 202%. We will get allocated overhead in the finishing department amount 8,282,000. So the allocated overhead is more than the actual overhead, so there is an over allocation by the amount $300,000. So in the machining department there is an under allocation by 200,000, and in finishing department there is an over allocation by 300,000. So for the total job there is an over-allocation by the difference. So the total over-allocated overhead equals 300,000 minus 200,000. We will get an over-allocation by 100,000. Question number 6. Why might Pisano use two different manufacturing overhead cost pools in its job costing system? The answer is that a homogeneous cost pool is one where all costs have the same or similar cause and effect or benefit received relationship with the cost allocation base. Pisano likely assumes that all its manufacturing overhead cost items aren't homogeneous, especially those in the machining department have a cause and effect relationship with the machine hours, while in the finishing department have a cause and effect relationship with the direct labor costs. Pisano believes that the benefits of using two cost pools, more accurate product costs and better ability to manage costs, exceed the costs of implementing a more complex system. The next point in this chapter is accounting for end-of-period under-allocated or over-allocated indirect costs using alternative methods. The approaches to disposing under-allocated or over-allocated overhead: first, the adjusted allocation rate approach; second, the proration approaches; third, the immediate write-off to cost of goods sold approach. Under-allocated and over-allocated indirect costs. Under-allocated indirect costs occur when the allocated amount of indirect costs in an accounting period is less than the actual incurred amount. But the over-allocated indirect costs occur when the allocated amount of the indirect costs in an accounting period is greater than the actual incurred amount. We calculate the under or over allocated indirect costs by subtracting the actual indirect costs incurred minus the indirect costs allocated. So, under allocated or over allocated indirect costs are also called under applied or over applied indirect costs, and under absorbed or over absorbed indirect costs. The adjusted allocation rate approach. The adjusted allocation rate approach restates all overhead entries in the general ledger and the subsidiary ledgers using actual cost rates rather than the budgeted cost rate. First, the actual manufacturing overhead rate is computed at the end of the fiscal year. Then, the manufacturing overhead costs allocated to every job during the year are recomputed using the actual manufacturing overhead rate rather than the budgeted rate. Finally, end-of-year closing entries are made. The result is that at year-end, every job cost record and finished goods record, as well as the ending work in process control and finished goods control and cost of goods sold accounts, represent actual manufacturing overhead costs incurred. Second approach is the proration approach. The proration approach spreads under allocated overhead or over allocated overhead among ending work in process inventory, finished goods inventory, and cost of goods sold. Materials inventory is not included in this proration because no manufacturing overhead costs have been allocated to it. Some companies use the proration approach but base it on the ending balances of work in process control, finished goods control, and cost of goods sold account prior to the proration. The prorations based on ending account balances are not the same as the more accurate prorations calculated earlier based on the amount of manufacturing overhead allocated to the accounts. Third approach is the writing off to cost of goods sold approach. Under the right-of approach, the total under or over allocated manufacturing overhead is included in this year's cost of goods sold. Let's solve this exercise. 430. Proration of overhead. The Ride-on Wave Company produces a line of non-motorized boats. Row uses a normal costing system and allocate manufacturing overhead using direct manufacturing labor cost. The following data are for 2014. He gave me the budgeted overhead cost by 1,225,000 and the budget direct manufacturing labor cost 250,000 and the actual overhead cost 117,000. Inventory balances on December 31, 2014 were as follows. The work in process, he gave me the ending balance and the direct manufacturing labor cost and ending balance. The base of each work in process and finished goods and cost of goods sold. He gave me the ending balance and the labor cost in the ending balance. He wants first to calculate the manufacturing overhead allocation rate. To first calculate the overhead allocation rate, we will divide the budgeted overhead cost, which is 125,000, by the base, which is the budgeted direct manufacturing labor cost, 250,000, to get the allocation rate. Here, as we said, that budget manufacturing overhead rate equal budgeted manufacturing overhead cost divided by the budgeted base, which is the direct labor cost, 125,000 divided by the $250,000, we will get 50% of direct manufacturing labor cost. So the budgeted rate or the overhead rate is 50%. Number 2, he wants us to compute the amount of under or over allocated manufacturing overhead. So we will get the overhead or the allocated overhead and compared it with the actual overhead. So the allocated overhead, we will get it by multiplying the actual manufacturing overhead cost multiplied by the budgeted rate we will get from first question to get the allocated overhead. Here, overhead allocated 50% multiplied actual direct manufacturing labor cost 50% multiplied by $228,000, we will get allocated overhead by this amount, $114,000. We will compare the amount overhead allocated by the actual overhead cost. The actual overhead cost equal 117,000 and the allocated overhead less than the actual by 3,000, so there is an under allocation by $3,000. So under allocated manufacturing overhead equal $3,000. Number 3, he wants us to calculate the ending balances in work in process, finished goods and cost of goods sold if under or over allocated manufacturing overhead is as follows. Written off to cost of goods sold, prorate based on ending balances before proration each of 3 accounts, and prorate based on the overhead allocated in 2014, the ending balances before proration each of the 3 accounts. So to write off to the cost of goods sold, we won't change any numbers in the work in process or finished good, but the difference will be appears in the cost of goods sold account. Here, all under allocated manufacturing overhead is written off to cost of goods sold. Both work in process and finished good inventory remain unchanged as we said. So this is the balance before proration. Work in process 5,700 and finished good 245.50, cost of goods sold 549.250. And the proration of 3000 will be appeared in only cost of goods sold by adding it, because it is an under allocation, so we will add this amount to the balance before proration. So the cost of goods sold will increase by 552 to 150, and the work in process and finished goods remain the same. So the total will be $848,000. Second one, the under allocated manufacturing overhead prorated based on the ending balance. We will get the balances before proration of the work in process, finished good, and cost of goods sold, and we will get the percentage of each balance by dividing the work in process 700 divided by the total 845,000. We will get the percentage 0.06, which is 6%. So the work in process is 6% from the total balance. And also finished goods, we will divide this number 245 and 50 divided by 845,000. We will get 0.29, and the cost of goods sold 549 to 150 divided by 845,000. We will get 0.65. This is the percent of the balances from the total, and then we will prorate the amount of under allocation, which is 3000, according to these percentages. So the proration of $3,000 under allocated manufacturing overhead, 0.06 multiplied by 3000 equal 180, and 0.29 multiplied 3000 equal 870, and 0.65 multiplied 3000 equal 1150. So we will dividing the amount of under allocation among the three accounts. So we will, because it is an under allocation, so we will add this amount on the ending balances. So we will add 180 to 700. So we will get the account balance after the proration for the working process 808, and for the finished goods we will add 870 to this amount to get the balance after proration 245,920, and also the cost of goods sold 551,200. So we will get the total account balance after the proration, or the amount after we make this under allocation added to the total 848,000. 3C, under allocated manufacturing overhead prorated based on 2014 overhead and ending balance. Here we will divide the amount of the under allocation among the overhead balances of each of the working process and finished goods and cost of goods sold. So the amount before proration, as we know, 5,700, 245.50, 549, 250. We will get the allocated manufacturing overhead for each balance by multiplying each of the labor costs for the working process and finished good and cost of goods sold multiplied by the budgeted rate. Okay, so here we multiplied the for the working process 2520 multiplied by the budgeted rate, which is 50, to get the allocated overhead for the working process by 10,260, and also for the finished good and cost of goods sold, and then the total. And then we will get the percentage of each of overhead for each account by dividing this amount work in process overhead allocated 10,260 divided by the 114,000 to get the percentage which is 9%, and also for the finished goods and cost of goods sold, finished goods by dividing 29,640 by 114 to get the percentage which is 0.26, and also for the cost of goods sold 74,100 divided by 114 to get 0.65, and then we will multiply these percentages for each account by the 3,000, the amount of under allocation, to get 270 for the work in process and 780 for the finished good and 1,150 for the cost of goods sold, and adding this amount to the balance before proration, number 1, to get the balance after the proration. Work in process 5,970 and finished goods 245,830 and the cost of goods sold 551,200. So these are the three approaches to deal with the over or under allocated overhead for the first writing off to the cost of goods sold, and prorating for the work in process and finished goods and cost of goods sold at the ending balance, or the overhead balances for each account. Finally, the explanations of the transactions. First entry, purchases of materials direct and indirect on credit, so we will debit materials control and credit the account payable control. Second one, the usage of direct material and indirect material, so the work in process control will be debited, and also the manufacturing overhead control, and credit materials control because it's decreased. Third one, the direct and indirect labor costs incurred. The work in process control will be debit and manufacturing overhead control debit, but credit the payable liability. Fourth one, other factory department overhead costs incurred, no material or labor, such as insurance or depreciation, so the factory overhead control will be debit and credit either account payable, accounts depreciation, and prepaid insurance. So now, by finishing this point, we reach to the end of chapter 4, hoping you understand it well. Thank you and goodbye.